You have been lied to about using leverage in Forex trading. Why? Because when people talk about leverage, they focus in on its unique selling point, which is that it enables a trader to control large trading volumes with only a small investment. Forex brokers are especially keen to tell you about how much leverage they will give you, just to get you to open an account with them. A typical broker will often advertise the ability to leverage your account with them at 100 to 1. This means that you can trade 100 times what you deposit. For every $1 you deposit, you can trade $100. So if you have $1,000, you can place a trade worth $100,000. So where is the dishonesty? Well, the dishonesty is that the brokers are not usually upfront about the risk involved, and just how easily you can lose your $1,000 when using this amount of leverage. If you use leverage of 100 to 1 in a trade worth $100,000, you only need to put forward $1,000, and your broker will in effect loan you the other $99,000 needed to cover your trade. We all know how volatile the Forex market is, and a trade will often move against you before turning around and going into profit. If your trade moved against you by just 1%, it would wipe out the $1,000 you put forward yourself. Now, your broker will not be prepared to lose money himself on your gamble and will act to protect himself from losing on your trade. As soon as your 1% of the trade is wiped out, he will close your trade for you. This is called a margin call and is necessary for your broker to ensure they don't actually put their own money at risk. Now, the trade you placed may have been a good one, which turned around and moved into a profitable position. It's too bad you won't make any money on it though, because your trade got canceled when it made a small movement against you first. You just lost $1,000 in the space of a few seconds because you were too heavily leveraged. So, what have we learned? The important lesson here is not to allow your account to become too heavily leveraged. You may as well flush your money down the toilet and place it on a trade where you have no room to maneuver. When leverage of 100 to 1 is advertised, it means that this is the maximum you can leverage your account by 100 times what you deposit. You don't actually have to use the full amount of leverage offered though, and the less leverage you use, the more breathing space you will have if your trade starts to move against you. You can start using this advice right away in your trading and stop putting your own money at undue risk. Alternatively, you can learn more about effective Forex trading and give yourself not only a better chance of survival in the market, but a chance to make some money too. Click on the link below this video to get yourself on the right path to Forex trading success. Thank you.